Good afternoon, good evening, and welcome to the Wednesday, the 4th of May. May the 4th be with you to all you Star Wars fans out there. Slightly late running webinar here with Steve Marty on the call for tradeday.com. Welcome, everyone. Apologies for the delay. I just had a problem in here. I was on Tradeovate earlier on this morning. Everything seemed fine. Just been trying to log into Tradeovate and had some issues there. So the login screen not even coming up. So that's my excuse for being a little bit tardy today, so my apologies. Hopefully I'll be able to get into Tradeovate and we'll be able to look at some charts. Otherwise we might have to park that for this webinar. I'm just going to run through though our usual other stuff in here, the calendar and what we've got coming up, and then I'll also take a look at some of the articles from the major news wires in here today. So let's kick off. I'm going to take a look at the calendar first of all. I mean, it's all about the Fed today, right? I mean, personally, I won't be trading today ahead of the Fed. I've got kind of like my slightly longer term, like swing positions on at the moment, for what it's worth. I'm still bullish on equities on like a 3 to 5 day outlook in here. But on a day trade basis, I'm kind of neutral in here going into ahead of the Fed. I think it's kind of somewhat playing a lottery if you go in with an actual open position ahead of the Fed, and even running the run-in, obviously, liquidity is going to be maybe a little bit lighter just before that, and then also, the markets are generally fairly calm, right ahead. And this morning we're seeing a slight creep up on the stock markets in here, slightly lower on bonds. Markets are relatively quiet in here so far this morning. If you take a look where we are on the FX side, Australian dollar's got a follow through on the upside, which I'll talk about shortly from the rate hike. I'm sure James went through that yesterday, but the unexpected or the more than expected rate hike that we saw from the RBA, the Reserve Bank of Australia, yesterday. So but FX is fairly quiet in here, and at the moment we're seeing US bond markets are pretty much unchanged. European bond markets lower. They've been continuing their downward trend, but US bond market's fairly unchanged on the day. Gold's relatively unchanged on the day. We have seen a spike higher though in oil. So I will try and get to the charts, but all focus is going to be on the Fed. I mean, we do have some stuff ahead of the Fed, so let's just run through that. We've had some stuff this morning as well. So it's PMI service and composite PMI day today. So we had European data come through so far this morning. And remember, it's still a Chinese, it's Golden Week in here in China. So we've still got some holidays going on in China at the moment. But if we look in here, we have the service sector and composite PMI data kind of mixed in here. Some in black, a couple in red, one in green. So mixed in here so far from Europe. Going into this afternoon in not too long, actually, in about 38 minutes. There you go, quarter past the hour. We have ADP non-farm employment. Remember, that's the precursor data to the non-farm payroll data we get on Friday. Often in the past, that has been a bit, significant mover in markets. And when I'm talking past, I'm talking years. More recently, hasn't really had a big impact. It did have more of an impact through COVID, less of an impact right here, right now. So I'm not expecting that to move markets, particularly just right on the before the Fed meeting and Fed announcement later today. Similarly, we have the market PMI data, and that comes out at 9:45 Eastern, 8:45 Central today. And that data, the market data, kind of gets superseded a little bit by the ISM data. So the market S&P data in here getting superseded by the ISM data, which comes out 15 minutes later, 10 o'clock Eastern, 9 a.m. Today Central. So that could move markets in here. That's much watched. So I'm watching out for that. If you're trading oil, obviously we get the Cushing crude oil inventory data coming here at 10:30 Eastern. And then it's all eyes on the Fed. This going into the US afternoon, the evening in Europe, UK. So 2 o'clock Eastern is the decision. Pretty much nailed on. If we go and look at our Fed tool in here, actually I've got it on the June meeting. If we go to the May meeting in here, nailed on for a 50 basis point hike in here, currently 25 to 50 for 75 to 100. So that's pretty much nailed on. Even an outside chance of a 75, but I mean, that's really unlikely. What is still surprising to me, unless I'm getting something completely wrong and misreading this, but as far as I can tell, this is nailing on a 75 in the following meeting in June, which seems to be too aggressive to me. My gut, okay, let's talk about the Fed. My gut into the Fed is that the market is priced in a lot of hawkishness. and it's all going to be at the press conference. Okay, so that's half an hour later, 2:30 Eastern. So my feeling is that I think the Fed knows that the market has got very ahead of itself on the hawkishness. They don't want to temper that too much, but I think they will temper it slightly. And I do not think, I think the market is getting over itself. I think we've seen the Fed indicate their hawkishness. I think we've gone past peak hawkishness. And I think the market has got a higher peak on its hawkishness than the Fed. And I think the Fed is going to backtrack the market a little bit. That is my feeling. That is my view. Okay, for what that's worth. Okay, but that's what my feeling is, that the Fed is the market is a little bit ahead of the Fed in here. I don't think the Fed's particularly behind the curve. Sometimes the Fed does get behind the curve and what the market's expecting, but I think the Fed's pretty much where it should be. And I think the market is a little bit ahead of itself, ahead of what the Fed needs to deliver and will deliver. So you may see, even if the Fed delivers what the market expects it to right now, which is obviously a 50 basis point hike and a guidance for at least another 50 going forward. And then obviously we're going to get details of the trimming the balance sheet. That's going to be important today as well. So you've got kind of multiple factors. The hike itself, almost certainly 50. If they go 75, how the market takes that, I think, from the bond market will almost certainly sell off. Equities, they might like it. Equities might say, well, the Fed are getting more aggressive. They're going to tackle inflation rather than tackle inflation up front now. But I think what the Fed will do is deliver their 50. Their guidance going forward, I think, is going to be slightly tempered. I don't think they want the market thinking they're going 75 next. They haven't gone 75, I think, since the 1990s. I read this morning. So for me, the risk is they kind of try and temper that slightly. And I think the equity markets will like that. Bond markets could rally on that as well. So you could see bonds and equities rallying on I'm not going to say dovish Fed, but a less hawkish Fed. So de facto dovish, but less hawkish Fed than the market's currently anticipating. And then clearly the guidance on the trimming the balance sheet, the effective quantitative tightening, because remember, in a position of aggressive quantitative easing, and the effective quantitative tightening by trimming the balance sheet, reversing the bond purchases in here, that's going to be a key factor to watch as well today. So there's kind of a lot of moving parts, undoubtedly going to be very choppy. I would strongly suggest not putting in stop entry orders. Okay, stop entry orders on this kind of event. On a data event, they're not too bad. Okay, let's just talk about that a little bit. So on a data event, it's kind of plain vanilla, right? Employment's a bad example. In employment, you've got different elements of the employment report. In fact, in most pieces of data we get, there's like different elements. Even today's ISM number, right? You've got the ISM non-manufacturing employment, you got the actual non-manufacturing PMI data, okay? But nevertheless, people are looking at really the PMI, okay? So data in here. And that's kind of plain vanilla. It's either above this number or below this number. And you could actually, and algos are out there that set up, if the number prints above here and how much it is above here, there'll be aggressive buy or sell orders on the basis of that, depending on what market you're looking at, market orders, or you could set yourself up a stop entry order. However, with something like the Fed, right, there's a lot more subjectivity. There's a lot more interpretation, and there's various factors. There's got the actual interest rate decision itself. You've got the kind of the press conference talking about what's going to happen going forward with respect to the actual hikes. You've got the dot plot chart. I'm believing that's going to be released today along with the statement. And then we also have the actual the press conference itself, and then there's going to be some statement on the easing, the quantitative tightening, effectively the reduction in the balance sheet. So you've got lots of factors. So that can then, if algorithms are out there reading it, individuals reading it, then you can get the market whipsaw. You can see it very erratic around the release because there's lots of different moving parts. So I would strongly not recommend or, suggest that you don't put in stop entry orders because they can be kind of quite dangerous in this scenario. You can easily get stopped in, it looks bullish, whatever comes out might be looking bullish, say for stock indices. They start to rally and then there's another element that is bearish for stock indices. And one time the market realizes that you're stopped into a long position, the market rallies, stops you into a long position, stop entry, and then the market completely then capitulates lower. And then you get stopped out before you know it, right? Or you might, if you haven't put the stop loss in, then you're in trouble, right? So I would strongly recommend not doing that. Maybe let the dust settle. There's probably going to be plenty of price action in the minutes and in the hour or so, post Fed for you to be able to trade and have a decent to be able to make some profits. So let the dust settle. I'm not talking about letting the dust settle for hours. I'm talking about letting it settle for a few minutes after the announcement, and then again through the press conference. You have to be very agile in these circumstances. So that's my take. Anyway, that's my 2 pennies worth on that. A little look. I'm sure we would have gone through all this. Obviously I was it was a bank holiday on Monday, so I wasn't around, and I had commitments yesterday, but I'm sure James has run through it. It's a busy week, right? So we've already had the manufacturing and non-manufacturing data coming through. We've got the rest of the non-manufacturing, the service sector PMI data today. We had, as I said, the RBA hiked interest rates more than anticipated yesterday. That was a shock to markets from one of the most dovish of the major economies, global economies, one of the most dovish central banks, one of the most dovish central banker, Low, has shifted certainly over the last month. He shifted to slightly less dovish, more hawkish, and then even more hawkish yesterday, delivering a larger interest rate hike than the market had expected. They're only looking, I think, for 0.15, 0.25 was delivered, and the forward guidance is more hawkish than the market had previously expected. So we've seen this shift. Going forward as well, just to highlight, I know it's all focused on the FOMC today. We have OPEC tomorrow. UK PMI data tomorrow as well, because we're a day behind because of the UK holiday on Monday, and then we have the Bank of England in play tomorrow with another rate hike expected there, and then obviously we've got focus on the US employment report on Friday. Let's take a look at a few articles here. So bonds drop, US futures rise. So we've had a decent rebound, that intraday rebound that we saw at the beginning of the week. So Monday, big sell-off, big rebound, turnaround rebound. Looks like from a new lows on most of the indices. Try and get to the charts, might not be able to get to the charts. And then we saw a solid consolidation yesterday. Markets push higher, and then overnight futures are higher as well. So that's all positive. Let me take a look at this article here with you guys. So Fed to tighten in here. So Fed to tighten with big high asset runoff decision day guide. Okay, so this is probably worth running through for you guys in here. Looking at the balance sheet trimming particularly. Okay, reduce the size of its bloated nearly $9 trillion balance sheet. We'll certainly be watching out for that, and what's kind of expected in here. So some investors are betting on an even larger 75 basis point hike in June. So we've seen that in the curve. Okay. Free options during the closed door discussions, that also got a 75 basis points and potentially even a 75 today, right? The odds of a surprise are low. They've been very much pointing to 50, and it'd be very odd for them to jump and do a 75 right now. But I think the guidance is going to be really important. Loose guidance, ongoing interest rates will be appropriate with dealing with it. So it's all going to be about the language, okay? So it's going to be really important to see. So this is what economists expecting to signal ongoing increase in rates. 81% expect repeat of the March guidance, with 19% only looking for a signal half point or larger increases going forwards. And the balance sheet update in here is going to be critical. Okay, its plans to shrink the balance sheet, and when they're going to do that and how aggressively they're going to do that. That's probably going to be critical in here to how markets react today, more than the guidance on the rate hikes. Okay, in line with nearly double the peak rates of 50 billion a month. So Brainard, who remember is more of a dove, recently confirmed by the US Senate to be Fed last year, could come as soon as June. So probably looking for June or afterwards. We're looking for the balance sheet to start to be reduced. Some numbers on that might be interesting. Okay. So again, look, powers like to be pressed on the pace and size of future rate increases. Okay, would he consider a 75 basis point hike? Okay, and that wasn't done since 1994 by Alan Greenspan. So there's lots to be watching in here today. Lots of moving parts. Okay, guys. What else do I have for you in here? Because I was just messing around with Trader, I haven't gone through all of these in here. So yeah, I would certainly suggest looking at that article there. So Fed to tighten with big high asset runoff, and see what we're kind of expecting in here. Let's take a look in here. So Fed expected to step up inflation fight with big rate hikes. So everything we're just discussing here. So oil jumps. So EU. The reason oil was up. We said we'll talk about this today. EU announced today plans to ban Russian oil potentially by the end of the year. Okay. So sanctions on Russian oil, and so obviously that's put an upward price on oil, because it means that it's effectively controlling, limiting supply, right? You're basically saying, well, we're not going to take your supply, so that's going to put a bid to other oil elsewhere, right? So that in here effectively just sort of de facto saying limiting supply in one way, by saying you can only put your demand in certain places. Okay, means that you've seen a spike higher, 3% higher in oil this morning. Let me just go and run through the actual where we are today. So European markets in here notably higher. We had a late bid, so if we go and look at stock indices on the European side. So European stock indices, actually they were high, dipped back low in here. Actually, a little change in here this morning, but they did play catch up. They had to play a little bit of catch up in here this morning, but then dipped back lower in here already today. But if we go take a look at US futures in here, so it was a resilient day yesterday. And US futures in here pointing slightly higher in this morning. They've been kind of oscillating around unchanged. So we obviously had an update yesterday, not by a huge amount, but we'll go take a look at the futures in here, just in case I can't get to there. So futures are in here, slightly higher in here, about 0.5% up in here this morning, following through from a fairly firm day in here yesterday. Let me try and reopen this Trader Buffet screen in here, and then we can look at some charts. Otherwise, it might be a slightly shortened webinar in here today. Really not sure what is going wrong in here today. I was in this earlier on. It was absolutely fine. I don't know if you guys, I will go and report this, because for some reason, let me just open up a fresh browser page. I'm just going to try and open it on a new browser. You won't be able to see it because I'm not sharing the browser. No, I'm still getting the same problem. Nothing coming through. Not quite sure what that is, guys. But to be quite honest, I would strongly suggest not trading in here first thing this morning. I'm going to go and report that and see if I can find out what's at the bottom of that. I hope you guys don't have any problems with that. Right, I'm going to wrap it there then. I'm going to wish you all a great trading day. Stay safe out there through the Fed. Be careful. My strong view would be, keep your hands in your pockets until you can probably trade light. Just do little in and out trades in here ahead of the Fed, if that's your strategy. But I wouldn't have anything exposure going into the Fed. That's just going to the casino. And then be very careful about putting stop entry orders in. Let the dust settle. Let's see what happens after the first 30 seconds to a minute on the decision. And then similarly, you need to be very wary around the press conference, because that could be a bit Wild West. It could be very volatile through that. So be careful, stay safe, maybe reduce your size slightly. We're expecting volatility. Reduction in size would be a good thing to do today. Maybe looking at trading those micros. All right, have a great trading day, everyone. Take care. Bye.